we head into the new year, investors are probably wondering what the major market drivers, secular trends, and risk will be. Here with us now to share his 2020 outlook and more is Aristotle Atlantic Partners Managing Director, Owen Fitzpatrick. Owen, thank you so much for joining us.
Thanks, Jenna, for having me.
Absolutely. So tell us a little bit, Owen, about Aristotle Atlantic's investment philosophy, as well as how you're differentiated.
Sure. So Aristotle Atlantic, we're actually based right here in New York. We're part of a much bigger organization that has offices out in California. We have a U.S. large cap value team out in California, also a credit team, international and global team, all managed out of California. And then up in Boston, we have a small cap team, and in New York is our team. We run U.S. large cap growth and the U.S. large cap core. I've been at Aristotle now 3 years, just came over 3 years ago after a long career at Deutsche Bank. Love it. The organization's growing rapidly. When I first started talking to them, we were 11 billion in assets, and now we're up over 30.
Wow, a lot of growth.
A lot of growth. So it's a fantastic environment to operate in. And then in New York, what we do, we concentrate on two strategies, U.S. large cap growth and U.S. large cap core. And from a philosophy standpoint, we basically believe in a simplistic way, equities are really driven by one of three things. Either they're driven by the economy improving, which is in this market very difficult to get right. Secular trends, which are probably gaining steam, increasing in scope and the power. And then the last category, and probably our favorite by far, is product stories, where products drive, for the most part, healthcare companies when certain products are approved, and they take significant market share and can disrupt markets quite a bit.
And what are you seeing in terms of demand for active versus passive investments?
So we love secular growing industries, and in fact, when you think of active management, it's a secular declining industry. So we're battling, I think, two things. One, the move towards passive, but also a decrease in fees. I think to some extent, the environment could be getting easier for a variety of reasons. One of them I mentioned in relation to kind of the secular trends and how impactful they are. So I think that's making active investing within the equity space has a lot more potential to outperform. And the second component is, I think, when you look at ESG, and that's going to have significant ramifications. There are passive ESG strategies out there, but I think it lends itself to a large extent to active management. And it's not just kind of the concept of ESG, but ESG is also morphing in to some extent into some of those secular trends. We are seeing a lot of impact in terms of environment. Here in the US, obviously a movement towards getting rid of straws, but you're seeing broadly, removing plastics, and you'll see more and more of that coming. So that's just one example of kind of ESG morphing into a secular trend.
And what's your equity market outlook for 2020, and what major market drivers do you think we'll see in the new year versus 2019?
Sure, so I think a kind of very different year than 2019, where we saw very little earnings growth, but yet an equity market that was well up over 20%. And 2020, I think it's going to be more earnings driven, probably positive earnings growth year over year in the high single digits. Probably still some expansion in terms of the multiple of the market, just given that interest rates are probably going to stay low. I think some of the things that can help equities along, just like we saw in terms of Fed policy in late 2018 when interest rates were rising and the impact that had in the fourth quarter, it was pretty dramatic. And then the subsequent kind of reversal and the reduction of interest rates, and then the market really starting to increase significantly. But it's going to boil down to, I think, in 2020, much more of a representation in terms of economic growth, not only in the US, but globally, and then a pull along in terms of earnings growth. So it's going to be probably a broader, and you can see almost kind of how the market has repositioned in the second half of 2019 in relation to getting more sensitive around cyclical sectors like energy, materials, financials. So I think that's going to fall into 2020 and be somewhat of a driver for equity prices.
And you mentioned secular trends as part of your investment philosophy. I wonder, could you tell us a little bit more about this, and if there are any secular trends that you've identified recently?
Sure, so our definition of a secular trend, we want to see a shift in spending. It could be at the consumer level. The way we actually consume media today is a lot different than we did 4 or 5 years ago. It could be mandated by the government, the Affordable Care Act, or it could be companies making a decision that they're going to utilize cloud computing. So those are examples within the three segments of the economy. The ones that we're most excited about, and the two in particular, are 5G and personalized medicine. So 5G, it's not really the next version of cell phones in terms of smartphones. It's really much broader than that. It's going to allow Internet of Things to connect, driverless vehicles. So this is a real broad expansion in terms of how much growth we're going to see in relation to 5G relative to 4G LTE. And then liquid biopsy is probably our favorite. We look at the ability to diagnose a disease is critical in order for patients to get the proper type of care. And what you're seeing is really personalized medicine, where they can take biopsies, whether it's blood biopsies, urine biopsies, and tell exactly the type of disease that you have, what the mutation is, and then get you the proper type of treatment. So it's really kind of changed medicine going forward. And what you're also going to see is not only the end consumer utilizing it, but think of it also in terms of, if you're a pharmaceutical company or a biotech company, the ability to really streamline your patient population to target a group that has a very specific mutation, and then find the drug that really works in relation to that mutation. So we're finally, after years and years of talking about 5G, years and years of talking about personalized medicine, these things have finally arrived.
A lot of innovation going on.
Exactly.
And I have to ask, Owen, what could go wrong in 2020? What are you keeping a close eye on, and what do you expect in terms of volatility?
Sure. So I think when you look at the market in relation to the backdrop of why equity prices are sitting here at such high levels, I think a lot of it has been driven by Fed policy and the easing off and lowering of interest rates. So I think if we see any signs of inflation in 2020 where it's above and beyond what the Fed is projecting, that could definitely dampen expectations around equity prices. And then the broader scope of trade, election coming up in 2020, that can have pretty dramatic impacts on equity prices. But I think in general, the outlook is positive. Economic activity, broadly speaking, US global activity, and then earnings growth really driving equity prices higher.
A lot on the horizon.
Always.
Well, Owen, thank you so much for joining us.
Thanks, Jenna, for having me.
And thank you for watching. I was joined by Owen Fitzpatrick, Aristotle Atlantic Partners Managing Director. From our studios in New York, I'm Jenna Dagenhart.